You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose. Welcome to Masters in Trading Live at Masters in Trading Live. I get on here every day the market's open, 11 o'clock Eastern Time. Go over the market, share some thoughts. Once in a while, we'll even share our trade of the day. Had a cool question this morning about options, just about basic calls and puts. So let's do an example. We'll start with calls. If the underlying stock's at 10, the 12 strike calls. If you buy the 12 strike calls, you have an option to be long at 12 if you want to be long at 12. If the stock's at 10, you don't want to be long at 12. So those options expire worthless. If the stock rallies to 1201 or higher, your broker knows that you want to be long from 12. So those options are going to be automatically exercised. Now you can do it the exact same way with the put side. Let's say the stock's at 10. You want to bet on the stock going down. Say you can buy those 8 puts. That gives you the right to be short at 8, but not the obligation. That's your option. So if the stock's at 10, those 8 puts that you own, don't exercise those. You don't have to. Your broker knows that you don't want to be short at 8 with the stock at 10. Think of it like stock. Your puts, think of it like your short stock. Your calls, think of it like your long stock, and that'll help you as far as expiration. Okay? 4 topics we're going to talk about today. We're going to go over the Qs. We're going to talk about copper. Got a little something on the port strikes that are over, and we are walking into earnings season. We love trading earnings. We trade them a very, very specific way. So we'll talk about earnings as well. Let's go to the slide deck. We are going to start you with the Qs right here. I'm going to make it a little bit bigger for you. Now, Qs are strong. The data is strong. But what's not strong, or what is strong and what's concerning, is all of the volatility measures. Why are the volatility measures bid? And when I say bid, they're strong. Bid, bid, bid. They're strong. Why? Well, we're walking into the election, right? The election is within 30 days, and that's why the VIX is at 2132. So if I put on the VIX, notice how elevated it is. There's more risk in the market right now than there was 30 days ago. This is why I don't really trust this strong rally. Even though the data is good, I don't believe we're going to see follow through on the upside. Now, what to watch out for? I'm looking for this 493 level, 488 right now, 493. We should see some resistance, but this is where we're holding ourselves accountable because the VIX is 2131. The 37-day measure is 2160. It's going to be very difficult for the market to sustain a rally as long as these VIX levels stay elevated. Bit of a confusing market right now. The data says we're going up, but the risk measures in the market kind of say otherwise. So that's what we're watching for. Let me open the PowerPoint. And we're going to go on. I thought this was pretty cool. And I'm sharing this because it surprised me. And so I wanted to share it with you guys. Now, copper intensity per car. So there's always an argument that there's not enough copper in the world because it's going to go all into electric vehicles. As much as I kind of believe in the long-term nature of copper, and I'm a copper bull, this is really interesting to me. And it's something that, I don't know, kind of surprised me. Maybe it'll surprise you as well. Copper intensity per car. The copper intensity per vehicle is expected to decline. So in 2015, say it, whatever this metric is, 99.32, working all the way down 40% less copper by 2030. And I think this is really cool to see that it's just innovation. The whole argument that there's not enough copper for EV, well, they'll just find other ways or other metals to use rather than copper. So very cool to see. We had a discussion in our Discord about how to take advantage of the port shutdown. Now, this has all been resolved, so this actually isn't really a thing, but I also found this pretty cool. We look at the retail giants and we look at the tonnage that's come in from the East and Gulf Coast ports. So if we take it for the last year, Walmart has got the biggest tonnage going through, IKEA, Samsung, Bob's Discount Furniture. Very surprised to see Bob's Discount Furniture up here, LG, and Home Depot. Now, we can't always trade all of these because a lot of them don't have tickers at all. But the ones that do have tickers, obviously Walmart. Walmart just super, super strong. Pulling back a little bit, but Walmart's just been super strong all year. Home Depot is up here as well. Home Depot, strong as well. They're not all going to be strong. Dollar General is certainly not strong. And others. So kind of cool to see, but Walmart's strong. Home Depot strong. Bob's Discount Furniture. Good to see you up here, Bob. This was cool. This was in our Discord today. I always say 10 traders take the exact same trade. Every single time, you're going to get 10 different results. It's true. That's why you have to learn. Education mitigates risk. The great thing about buying options is when you buy options, you can figure out what you're comfortable risking before you get into the trade. So if you're comfortable risking $1,000 on a trade, and that trade has 30 days until expiration, you want to risk your $1,000 into that 30 days. And so we call them ODNT in here, ENVX, October 14 calls, but look at the trading behavior of ENVX. ENVX rallies up to 19, drops all the way down to 7, and then rallies up to 12 or 13. So traders could be long from the 14 calls as ODNT shared, but also figure what you're comfortable managing. And that allows you to continue buying as the stock goes offered, because you make that decision beforehand how much you're comfortable risking. And by doing that, this allowed ODNT to continue buying the 10 strike. And so that's the way. Starts with the 14 strike, but by continuing to buy the 10 strike, he's able to lock in 600%. So great job. 10 traders take the exact same trade every single time. You will get 10 different results. That's why we have a community, so people could talk about their risk, because every trade is not for every trader. Let's talk about earnings. I started Masters in Trading back in 2015. In 2015, I started the earnings program. I've been trading earnings the exact way since being a market maker on the floor of the Chicago Board Options Exchange. Here's an overview of how we trade earnings. Here's a ticker, and let's call this ticker ABC, XYZ. This is every single earnings that this ticker has released since it's gone public. How much does it move after it releases earnings? Well, 12%, 12%, 12%, 22%, 12%, 20%, 30%, 30%, 14%. What do we know? We know that this name, after it releases earnings, it moves. It's not up 3%. It's not down 3%. every single time. It's up over 12%, 13%. If it's going to move down, it gets its butt whooped. It doesn't move down 3%, it moves down 31% or 14%. So I ask you, if you look at all these numbers, what's the average that this name likes to move after it releases earnings? Well, using this data, it's about a 22% average. How we trade earnings is if the options market is only pricing in a 15% movement for the earnings, 17% movement to earnings, that is really, really inexpensive. So we want to back test and look at previous earnings movement. And then what we do is look at the options and see where those earnings are priced right now. In our advanced notice portion of this video, I'm going to continue doing this earnings example because earnings kicks off. I think it kicks off right now, but everybody says the big kickoff for earnings is this Friday. So right now, whenever you're considering trades specifically in that November expiration cycle, you need to consider earnings because all these names are releasing in that November expiration cycle. Thanks for watching. My name's Jonathan Rose. I'll be on live tomorrow, 11 a.m. Eastern Time. Thanks, guys.